Most people are currently filing their taxes, and a lot of them are asking themselves, why do I owe so much? Hi, my name is Carla Carderera. I am one of the co-founders at UpFront CPA, and we are a tax advisory firm who actually sit with our clients on a quarterly or semi-annual basis to look at their numbers to make sure they are prepared by the time it comes to file their taxes, and they will know approximately how much they will owe, so they will not be surprised. So if you are currently surprised about how much you owe, then were you ready to really file tax returns? Have you met with your CPA or with your tax advisor? Did you have your numbers ready? So let's talk about that today, because to tell you the truth, you should not be surprised about how much you owe right when it's time for you to file your taxes. You should have at least an idea, because you have to get ready, because you have to be making estimated payments throughout the year, and you have to know if the amount of estimated payments that you're making, is it too high? Is it too low? Do I need to make adjustments? These are decisions that you have to make as a high earner or as a business owner. It doesn't matter which one are you, but if you have high income, you have to be ready. And I can tell you from experience that most high earners are not surprised by the time they file their taxes, because they have been getting ready. They have been getting prepared. Most of them know their numbers, and most of them, the reason they know this is because maybe from prior experience, maybe when they started making maybe when they first opened their business, they were not as ready. But trust me, they are now, because they have already been through this experience. So let's talk about what most high earners do and how they get ready to file, to be ready by the time they come, it's time for them to file their taxes. So number one, they already know the outcome. High earners don't wait until April to figure things out. They already have a good idea about how much they're going to owe, about how they're going to reduce it, and what decisions impacted the outcome. Most of them actually will have financial statements that they understand, that they are looking at the numbers throughout the year. They get familiar with different strategies that are out there that they can implement during the year. As we always tell our clients, you have to make sure that you plan ahead. You have to make sure that you know your numbers, and then if you have some strategies that you know that will help you at the end of the year, they have to be implemented during the year. If you're currently filing your taxes now in April for prior year, it's too late. But if it's April at the same time, so you can actually start getting ready now for this coming year before the next tax season comes in 1 year. So I can tell you that high earners, they really take their time to prepare. And because, as I said, most of them have already been through this. Most of them have already paid too much in taxes, or maybe they know somebody that did. Maybe they work with a consultant, and they tell them you have to be prepared. You have to know your numbers, or it's gonna get to you. So if you are currently a business owner who had a high income in the year, even if you're a W-2 but you are a high earner, make sure that you get familiar with different strategies that are out there. But you don't have to do this alone. You can definitely do this with an expert. So a tax advisor, a CPA, those are some of we offer that here at UpFront CPA. So you can call us and we can help you throughout the year to be able to plan for the following tax season. So as I said, they plan during the year. They are not guessing. You, as your accountant or your bookkeeper, whomever you work with, or if you do it yourself, you already know your income as of right now, and you can make projections through the end of the year. Everything should be organized. Your books should be organized and clean. Your accounts should be reconciled. If it's a business that has been in business for several years, you can already make projections based on prior year. It depends on the type of business that you have. If it's a seasonal business, for example, then you have to maybe save some of the cash for those months that are a little bit slower than other months. But like I said, high earners, businesses that are high revenue businesses, they get prepared because they know that they have to, in order to be able to make sure that they don't overpay in taxes. As I mentioned, they review their numbers and they make adjustments throughout the year. They make decisions before the deadlines. So once you sit with your tax professional and they give you these different strategies, there might be other people that might have to get involved. For example, if the recommendation is to open a retirement plan, do you have a financial advisor that can help you with that portion? It's always good to actually meet with a professional in the matter to make sure that you have definitely all the information, because there might be things that you are not thinking about that a professional with a lot of experience can tell you. So that's what I'm saying. We always recommend our clients to not only work with a tax advisor, but to also work with a financial advisor, with an insurance person that can help them, or with a bank, have a good relationship with a banker. It takes a team to run your business. You don't have to do it by yourself. You don't have to make the decisions all by yourself. We work together with different, like as I mentioned, especially with financial advisors, because they help you with certain aspects on the strategy for your retirement, to save money, to make investments, and we can help you on the tax matter of those different strategies. So always please make sure that you look for an advisor that specializes in each area in order to be able to help you, and that you get the right recommendation and to help you implement those recommendations on time. So by the time April comes around, you are just confirming, you are not reacting. As I said, taxes at the end of the year, when it comes time to actually prepare them and file them, should not be a surprise to you. You should already have at least an idea. The high earners or business owners, they have systems as well. They use systems to run or to have their accounting, or they hire people to help them, right? But they know that they have to have clean books. They know that they have to have clear income tracking. As I said, you have to be able to make projections with real numbers and real history. Not if you have books that haven't been reconciled, that are not up to date, then you might make a decision based on incorrect numbers. And they have to have, obviously, structured expenses. They have to know the expenses that they're going to have for the entire year. Do you work with a budget? Do you check, at least on a quarterly basis, your budget and your projections against the actuals? That's not something that definitely has to be done. And we recommend doing it once a month, for sure, but if you might not have the time, then at least do it quarterly. You have to make sure that at least your numbers and your accounts are reconciled, and on a quarterly basis, at least 3 months. High earners and business owners with high revenue, they also work with advisor, as I mentioned earlier. You have to work with a financial advisor. You have to work with a tax advisor. You have to have a team, a consultant, people that can help you, people that will be in your team to be able to make those decisions, people that will give you recommendations, people that have experience based. We have a lot of different clients in different types of businesses. We have doctors, we have dentists, we have vets, We have, for example, businesses with inventory, which is another world, right? We have businesses that are service-based. So maybe they don't have as much expenses as other businesses do. So those, for example, really have to get creative and really have to look for a lot of strategies that do exist, that are out there to help you in order to be able to save money in taxes at the end of the year. Because this is money that you want to keep in your pocket. This is money that maybe you want to have it in a savings account and earn interest. This is money that maybe you would like to use to make an investment. So it's different. There's a lot of different strategies, and they might be good. The strategies might be good for each person independently or each company. That's why we like to say there's strategies out there that can be done, but the actual advice that we give the client, it will depend on the client. It will depend on their situation. There's not one single strategy that is good for everyone. So like, as I said, it's something that needs to be evaluated. It needs to be evaluated with real numbers. So we have to make sure that your financials are correct, are up to date, and are reconciled before we even give you advice, because we want to make sure that we give you advice on the right, true numbers. We have to make sure that you have your cash flow, because sometimes to be able to implement those strategies, there are actually payments that you have to make. There's transfers, there are transactions. So we want to make sure that we're not utilizing the cash flow, because you might need it later on for, and again, it depends on the type of the business. It depends if it's a seasonal business, but that's why you make projections through the end of the year. And that's why we have to know the history in the business before we actually give you advice and implement it. So definitely work with advisors. It's a must. And then the real difference is, the biggest difference isn't how much you make, is how much you keep and how intentional you are about it. As I said, even we depend on the client and their type of revenue and the year, because you might have a year that is really good with high revenue. You might have another year that is not, and things happen. The economy changes, so it might be year to year. There might be differences, and the strategies have to be changed. So the same strategies that helped you in 2025 doesn't mean that our strategies that are going to help you in 2026 as well. So that's why you have to meet with your tax advisor at least quarterly or several times during the year to make sure that the strategies are working or are still projected to work, and we have to be able to make adjustments in time. For example, we had a client that had a lot of revenue in 2024, and they paid estimated taxes based on the revenue of the prior year. In 2025, their revenue decreased, but they kept paying the same estimated payments throughout the year. So what happened? They were basically having the IRS keep their money for that time as a savings account. They're gonna get a lot of it back now, but this is money that could have been in their pockets throughout the year. And as I said, in a savings account, making interest. You have to make money produce money. So that's what I'm saying. Just because you meet with your advisor now in April, when you file your taxes, for example, to talk about 2025, you still need to meet with them to talk about 2026 and going forward. And even in 2026, meet with them several times to make sure that the strategies or the advice that was given to you now, they are still good when we meet again in October, for example. And if there are any new strategies that can be implemented in October, then they have to be done in time before the year closes in December. So don't be afraid to look at your numbers. Don't be afraid to sit with a professional to talk about financials, to talk about investments, to talk about cash flow. Sometimes during these meetings is when we actually hear a lot of the information that sometimes our clients just forget to tell us. If they, for example, purchase a new home, purchase an investment home, we should know about it even before you make the decision of making that investment. But we should also know about it as soon as you actually go through with it, because there's paperwork that we need. There's a lot of information that we're going to need ahead of time to be ready to be able to help you when tax time comes. So please don't be afraid to make an appointment with your CPA or with your tax advisor to talk about strategies and things that might be changing in 2026, for example. So if this tax season caught you off guard, you are not alone. But the key is making sure that it looks different. As I said, if 2025 caught you off guard, make sure that the same thing doesn't happen in 2026. We are UpFront CPA and we are here to help you. We are a tax advisory focused firm, and that's exactly what we do. We like to sit with our clients and plan and look at their numbers and make sure that we help them to keep some of the money in their pockets and that they are not overpaying in taxes. Thank you very much, and I hope you enjoyed this video.